Charleston's prices have absolutely exploded in the last decade, with Daniel Island up 143% and Johns Island up 80% since 2010. But what's happening in Charleston might be showing something even bigger is coming in 2026. With 100,000 plus new residents expected to move to Charleston by the year 2030 and a housing supply that's so low it can't keep up with the demand we already have, I think prices are in line for a big explosion. The smart money isn't asking if prices are going to go up. The smart money is asking, where should I get in Charleston before prices get up? Let's take a deeper look at what's happening right now in our Charleston market. Numbers that paint a clear picture of where we're headed. Charleston is one of the hottest markets in the Southeast. We have a perfect mix of relocators, retirees, families, and investors who all want to come to Charleston at once. The Charleston Metro will add 100,000 new residents by the year 2030. Berkeley County will bring in over half that, with 60,000 new residents in just this one area. We're seeing people flood in from the Northeast, the Midwest, and even California. Our home supply cannot keep up with buyer demand. Before COVID in 2019, we were seeing maybe 5,300 listings. Right now, we've only got about 4,000 homes for sale across the entire region. Yes, inventory is up 36% from last year and 216% up from the crazy low of 2021, but it's still not anywhere close to enough homes for the amount of demand that is coming. And wait until I show you what happens to home values in 2030 if this supply shortage is going to continue. Builders just can't keep pace. They're breaking ground on new communities, but it's still a drop in the bucket compared to the demand. And here's what's wild. 80% of our areas are still in sellers markets. Most of the country is in a buyer's market right now. And a buyer's market, sellers have to compete for buyers. Now, Charleston's not in a buyer's market. We're in a seller's market. A seller's market means we have fewer than 6 months of homes for sale. Buyers have to compete for homes. There's not enough homes and too many buyers. That means prices are going up. And that equation isn't changing anytime soon. It's simple supply and demand. When you have high demand, which Charleston has, and low supply, which Charleston also has, it means prices are going to continue to climb, even while the rest of the country sees prices declining. Look, in Charleston last year, prices went up 10% and interest rates were at 7%. How is it that prices in Charleston continue to go up even as interest rates are so high? And it's because of the massive demand of people moving to this particular area. So if we saw prices rise that much with the worst interest rates of 2 decades, imagine what prices are going to do when interest rates come down into the 6s or the high 5s or even the low 5s. Most markets across the country are stagnant or declining, but Charleston just keeps climbing. When I talk to buyers who waited in 2023, they're kicking themselves for not jumping in sooner. I have the same advice for everyone. The best time to buy a home in Charleston was in 1990. The second best time to buy a home in Charleston is today. And look, if we haven't met yet, I'm Matt O'Neill. I've been helping families find their dream homes here in Charleston for over 20 years. I've watched this market transform firsthand. If you like this info that I'm sharing and you want to see more market updates and neighborhood tours in Charleston, make sure you hit that subscribe button. And that brings me to this, what's really driving our market forward. There are 5 key drivers that are going to push Charleston's housing prices through the roof in the coming years. Each one alone could be significant, but together it's unstoppable. First off, people are moving here at an unprecedented rate. Charleston is going to add 100,000 new residents by 2030. That's 42 people a day, literally every single day, moving to Charleston. Places like Johns Island, Daniel Island, Somerville, they're all still growing with no signs of slowing down. Unlike some boom and bust towns that eventually cool off, Charleston has sustained growth for decades. What's changed is the acceleration of that growth. Charleston is growing faster now than ever before. Our job market is absolutely on fire. Charleston's port pumps $87 billion into the economy every year. It supports 1 in 9 jobs across the entire state of South Carolina. That's 260,000 jobs just from this one economic engine. Boeing is putting $1 billion into expansion and adding 500 good jobs that average 6-figure salaries in Charleston. MUSC, the medical university, brings in $5.3 billion annually and continues to expand its footprint year after year. And these job centers are exactly where you'll want to focus your home search. And I'll explain that when we talk about the best buying strategies later. Also, the tech scene is growing by 20% in 2026 with 250 plus companies. They still call Charleston the Silicon Harbor. These are high-paying positions that allow people to afford $500,000 homes and higher. Interest rates are also the sleeping giant. Rates right now are still around 7%, high sixes. But really, compared to the 3% that we saw just a couple years ago, when rates come back down into the fives, which we think will happen in 2026, watch out. We're going to see bidding wars and multiple offers in Charleston. The floodgates will open. If we're getting 10% price growth with high rates, imagine what price growth we're going to have with normal rates. I've been doing this for years, and I've watched this pattern repeat itself over and over. The next factor is the lifestyle of Charleston. It's impossible to beat. The beaches, the history, the food scene. Where else can you get all of this goodness in one place? Retirees and remote workers love living in Charleston because they can actually enjoy where they live. The Northeast and the Midwest are losing people because of weather and lifestyle and opportunity. Once, people would only move here if they had a job here, but now that people can live wherever they want and work remotely, Charleston became so valuable, and it became the place that everyone wanted to go. In my opinion, Charleston is still significantly undervalued compared to similar destinations. Our homes still cost so much less than places like San Diego, Miami, or other beach towns with half of our charm. While Charleston is catching up to these high-end coastal markets, we still have a ways to go. Charleston is one of America's best places, but our prices haven't caught up to that reality yet. Similar waterfront cities are already 30 to 40% more expensive than we are. But wait, I want to be completely fair here. This isn't a get-rich-quick scheme, and there are legitimate challenges that could impact the growth of Charleston. Let me walk you through what might pump the brakes a little bit. Smart investors do consider both sides. Interest rates and affordability issues are serious headwinds. If rates stay 6.5% or higher for longer than we expect, it will keep buyers on the sidelines. About 42% of Charleston folks already are spending too much on housing. There's a real affordability ceiling right now, and the gap between income and home prices continues to widen, especially for first-time buyers. Entry-level buyers are getting pushed further out from the peninsula with every passing year. This affordability crunch could slow the price growth, even in the short term. Insurance costs have become a major factor in purchasing decisions too. I'm seeing flood and wind policies double for some of my clients, especially near the water. Coastal flood policies are starting now about $1,400 a year, but can easily hit $4,000 or more for larger waterfront homes. The average home insurance here is now $4,500 a year, almost double the state average and rising fast. And these rates keep going up every single year, adding thousands to the cost of ownership in Charleston. For some buyers, especially retirees on fixed incomes, these insurance costs are deal breakers. The other problem is our infrastructure. It's struggling to keep pace with the growth. Traffic on Johns Island and I-26, what used to be a 20-minute drive, now takes 45 minutes at peak rush hour times. And I-26 is widening, but it won't finish until late 2026, and we still need more road improvements on top of that. We've got $150 million in key road projects with no funding source identified. The pressure on infrastructure is going to continue as Charleston continues to grow, and it could deter some potential buyers from moving here. Also, water management and flooding issues still need serious attention in many areas. Another factor to consider would be a broader economic downturn. It could cool off our market. A global financial crisis would hit Charleston too. No market is completely immune. But then Charleston would likely bounce back faster than most places just due to our diverse economy. Our mix of military, medical, port, tech, and tourism jobs gives us an incredible protection. In the 2008 to 2010 dip, Charleston did dip, but it recovered faster than most of the country. But long term, Charleston still has way more buyers than homes. These issues might slow things down a bit, but they won't stop the trajectory of growth in Charleston. Think of it as speed bumps, not roadblocks. So what does all this mean if you're thinking about buying a home in Charleston? Let's break it down by neighborhood and timeline so you can make the smartest possible decision. Okay, here's where the rubber meets the road. Let's translate all this market data into practical advice for different types of buyers and different neighborhoods. By 2026, the premium areas will see explosive growth. I'm talking Daniel Island, Mount Pleasant, Johns Island. They're going to lead the charge. Mount Pleasant is already up $900,000. That's 4.5% up in just 1 year, despite high interest rates. Daniel Island has an average price of $1.5 million. It's down just a little bit, but it's ready to surge again. And Johns Island sits at $675,000, up 12.9%, while the national market is cooling. These areas have the perfect combination of location, lifestyle, and limited supply. If you can get into these areas now, even if you have to stretch a little bit, you'll be thankful in 3 to 5 years. The more affordable suburbs will follow the premium areas. Places like Goose Creek, Hanahan, and Somerville typically lag 12 to 18 months behind the top spots in Charleston. These are your best entry points if you're a first-time buyer or an investor looking for cash flow. Somerville is growing from about 51,000 to almost 64,000 residents by 2035. That's significant population pressure that's going to drive up the current median price of $335,000. Hanahan's at $400,000 and Goose Creek is at $390,000. The smart money is looking into these areas now, knowing they're next in line for significant appreciation. As the premium areas become less affordable, the demand will ripple outward to these communities. By 2030, Charleston will be transformed. Think Nashville or Tampa prices. More expensive across the board, no exceptions. The days of affordable starter homes anywhere near the peninsula could be completely gone. Look, I don't have a crystal ball, but my prediction is that we're going to see close to 10% annual growth. You might be looking at a 50% price jump in the 2030s. My belief is that Charleston is going to be much more in line with the prices of similar areas like Miami and Southern California when we're in the 2030s. The window for getting in before this massive transformation is going to close pretty fast. The bottom line for anyone on the fence about buying, if you wait, it's going to cost you money. Probably hundreds of thousands of dollars. We have more homes for sale now than at any time since 2020. So that means you could get a deal. The cooling period has happened to some areas. It's your window of opportunity before the next wave. And I think the next wave will happen when interest rates drop, which will probably be sometime in 2026. Focus on areas near job centers and where they're fixing roads. If you can afford to buy now, even with higher rates, you can always refinance your home later. The price you pay for the house is forever, but the rate is temporary. Listen, I've been in Charleston real estate for 20 years and I've watched neighborhoods completely transform. But what's happening right now is like nothing I've seen before. All these factors are coming together to create the biggest change Charleston has seen in decades. So if you're thinking about buying here, your time is now. Seriously. Once all these interest rates drop, we're going to see a flood of buyers with multiple offers over and over again. The smart move is to get in before the next wave of price increases. And if you want to get in on the action, my team and I have helped over 5,000 families find their dream home in Charleston. I'd love to help you too. Just email me at sales@mattoneilteam.com and let's get started. We know which areas have the best growth potential. And we can help you find the perfect home before prices go way up. And if you're still researching which neighborhoods you might want to add to your short list, check out this video here where I rank Charleston suburbs from best to worst. I appreciate you watching and I'll see you on the next video.